Today we're talking about retirement plan options for businesses with no employees. And if you didn't check out our podcast last week, we talked about retirement plan tax credits along with some due dates to be thinking about. And if you're listening to this and you have employees, tune in to next week where we talk about business retirement plans for businesses with employees. But today, again, we're talking about what retirement plan options are available to those business owners that don't have any other employees outside of themselves and maybe some family members. And if you've been listening to the podcast on our YouTube channel for a while now, you'll know that our preferred vendor for anything business retirement planning is Life Inc. Retirement Services. And we brought on Matt Ruttenberg again to the show to kind of talk about this idea of retirement plans for businesses with no employees. So Matt, welcome back to the show.
Yeah, thanks, Mike. I appreciate it.
Yeah. So just to kind of get rolling here, again, what are just high level, top level, when we're looking at a business with no employees outside of family members, what retirement plan options are available to them?
Oh, yeah. There's so many. And I usually like to start off with what is it that you actually need to save or want to save or are able to save. So sometimes it's just an individual IRA or a Roth IRA, just keeping it very simple. Make it simple, keep it simple. Then we actually have a lot of clients who go into the simple IRA, even though there's no employees and it's usually an employee-based plan. The simple IRA, just because it has a little bit higher contribution limit. And that's really the only reason why we can do that. But then you get into the SEP IRA, which has a higher contribution limit, which we're going to get into. And then kind of like the cream of the crop is the solo 401k due to how it's calculated and how much money you can get into it. And then beyond that, which we'll talk about at some point, some advanced strategies, but the cash balance plan, which is the form of a defined benefit plan, and you're getting much higher contribution limits, and being able to stack these things is very important too.
Yeah, I love that topic that you said or you mentioned is that when we look at retirement planning, it's first question is, how much do you want to put away? Because if you're looking to put $5,000 away into a retirement plan this year, why go through the headache of setting up a SEP IRA, a solo 401k, or even going down that route when you can just fund a traditional IRA or maybe a Roth IRA with those funds? So I kind of like the idea of let's start with how much do you want to put away? And then let's kind of dig into, okay, based on that, what retirement plan are we going to go down your route? So let's kind of start digging into those plans, kind of the contribution limits of them, how they work, kind of what business owners need to know about each of them.
Yeah, and like you said, let's start with the bottom, right? If you only want to do 5,000, just because you own a business doesn't mean you have to do it. The only options are the solo 401ks or the SEPs. You can absolutely get into these individual IRAs or Roth IRAs. It's basically just based on if you want to do under $7,000, which is the new contribution limit for these traditional or Roth IRAs. And if you're over 50, then you can add another $1,000 on top of that, right? So that's the new limits for those individual plans. The next step up is this is kind of more rare, but like I said, the simple IRA. And the simple IRA is purely because they have a slightly higher contribution limit. And we are kind of bringing these back into the conversation a little bit more because under Secure 2.0, they introduced the ability to add Roth to the simple. Prior to that, there was no Roth option. And that kind of deterred us because that is a very powerful form of savings for retirement. So now there's the Roth. It's $15,500 for the simple. And then they have a catch up of $3,500 on top of that if you are over 50 years old. So that's the simple. And again, simple. It's very simple. There's no administration required. You're kind of just investing. There's no annual testing. It's very, very simple to get going. And it might be a good step or a second step to graduate into that plan option. Now, the next step beyond that, it's a big jump. It's the SEP IRA. Okay. And a lot of times this is kind of the default for a lot of solo entrepreneurs because it's easy. Again, anything that says IRA is easy. There is no administration involved. You don't need to have a third-party administrator. You don't have to have annual testing involved. You don't have to file a 5500. It's just simple. It's an IRA, right? So SEP IRA is $69,000 now for 2024. Last year, 2023 was only 66. So jumped up to $69,000. Now, this has to do with what kind of entity you are, right? So again, all of these, you don't have to actually have an entity. You just have to have the self-employed income coming through. So as a proprietor, if you're a 1099, that all counts, right? It's a Schedule C. That all counts for individual retirement plans. Now, when you start filing your taxes, if you are a Schedule C, it's going to be roughly about 20% of your net income is what you're going to be able to put into a SEP. Right? So that calculation, I can't remember exactly off the top of my head how much it was. I wanted to say 244,000 net revenue, I believe, somewhere in there to get to that $69,000, or maybe that was what it was for 2023. But when you are an S Corp, when you file as an S Corp, it's now 25% of whatever the salary is that you pay yourself. So if you do not pay yourself, we all talk about how you have to have a reasonable salary for the S Corps. If there is no salary, there is no ability to save towards retirement into a retirement plan. But it's 25% of your salary. This does not include distributions. Distributions do not count towards that calculation of a SEP. Okay. And a SEP is, we've talked about this before. There's two kinds of contributions when you get into these retirement plans. There's you as an employee, right? So this comes out of your paycheck, employee contributions, and there's employer contributions. A SEP IRA is basically a standalone profit sharing plan. That's exactly how it's calculated. You can't get into some of the more advanced stuff, advanced calculations that you can in a profit sharing plan, but it's basically like a profit sharing plan of a 401k. It's just sitting there by itself. So now let's talk about the solo 401k, right?
Yeah,
so
Matt,
this one does. Yeah.
Just to stop you 1 second there, I just kind of want to go through a number example for the SEP IRA. So just to kind of, again, you mentioned it's just the employer portion. So if I'm set up as a sole proprietorship, and let's say my income is $100,000, the max amount I could do in a SEP IRA would be roughly 20% of that. So $20,000. So you mentioned this number of 69,000. But in order to be able to do that max amount of that $60,000 number, we'd have to have income that equates to that, right? So it's based on, if a sole proprietorship, single member LLC, it's based on 20%, roughly 20% of the profit of your business up to that max amount, but it's the lower of the two. Now with a S corporation, if let's say you take that same business, $100,000 in profit, but now we're only taking a salary of $50,000. That SEP IRA limit is limited to 25% of our salary amount. So we're not talking about 25% of that $100,000. We're talking about 25% of that $50,000, which, we're talking, I think it's $12,500. So I think that's just kind of that rough idea to remember, is that it's based on, we have a high limit amount, but you need to have the income that's that high in order to really kind of maximize or truly max out a SEP IRA. Otherwise, it's just limited to the lesser, which would be your profit of your business.
Exactly. Yeah. And I just ran the rough numbers here for you too. If you're filing as an S Corp, it's $276,000 per year of what you'd have to give yourself as salary to max out that SEP, right? And I think it was $345,000 if you're filing if you're Schedule C proprietor. So because of that 20% versus 25%. So drastic difference there in going into the SEP.
Excellent. This episode is brought to you by TaxZone. At TaxZone, we understand that saving taxes can be complex and overwhelming for business owners. That's why we're here, to be that tax strategist in your back pocket, ensuring that you pay the least amount in taxes as legally possible. With TaxZone, you receive a tax savings blueprint tailored to your business needs, unlimited access to our team of tax experts, and an annual one-on-one live consultation. You'll also have access to our comprehensive training with videos, downloads, templates, workbooks, guides, and so much more, along with our monthly live trainings to keep you informed and in control. Thousands of business owners across the country trust TaxZone. It's time you did too. Visit us now and take that first step towards paying the least amount in taxes as legally possible. There has never been a better time to join TaxZone. Do not forget about our 30-day money-back guarantee. We guarantee that we will present tax-saving strategies that will, at a minimum, cover the cost of your subscription fee or your money back. This is your risk-free invitation to explore the benefits of TaxZone membership and how it can transform your approach to tax planning and savings. Go to taxelm.com. That is TaxELM.com. Now back to the show. So now let's continue on to the solo, because I think that we talk a lot about on the podcast here on where if you're really looking to maximize retirement as a business with no employees, that solo kind of opens up the door for the ability for you to kind of maximize both the tax savings, but also increase potentially the retirement side as well. So I'll kind of let you open up the door for that.
Yeah, absolutely. So the solo has the same limits as the SEP, $69,000 total. That's between employee and employer contributions, okay? Difference here, it does add a catch-up option. There is no catch-up for a SEP. So, and I'll explain what those numbers are here. So for 2024, the employee portion, so that's you as an employee of your own company, that is $23,000 now. Okay, it used to be $22,500, now it's $23,000 for 2024. And then you can add an extra $7,500 on top of that if you are over 50 years old. So that's what comes out of your paycheck if you were to be an S corp and filing that reasonable income for you. Now, the same goes with, like I said, the $69,000. So employer contribution is like it's profit sharing. That gets you up to the 69. So between those two portions, it's only 69. You can have all of it as employer contributions if you like, which is basically a SEP. But between those two, it's $69,000. And then you add that $7,500 on top of that. So right there, if you're over 50 years old, from that point alone, the solo is a more advanced option for you. So what that does, when adding that extra employee portion on top of the employer portion, that's calculated differently. So it's $23,000. It's up to $23,000 of your salary, up to 23, whichever one's greater. So you don't need to worry about that $345,000 or $276,000. It's a much smaller amount of money that you have to pay yourself in order to get more calculations. So for example, let's use $100,000 to keep it simple, right? So in the SEP, and let's say you're $100,000 salary, you're filing as an S corp. Okay, let's keep that simple. 25% of 100, $25,000. That's all you're allowed to put into the SEP. Okay, that's your max. Now that same 100,000 in the solo, you're doing the 23,000 plus 25,000 on top of it. So $48,000 of total contributions in the solo versus the SEP. Okay, so that is a huge benefit right off the bat. Now, again, it goes back to how much do you want to contribute? Maybe that 25% is all you need. Maybe you don't want to do more than that. Then let's keep it simple and keep it in the IRA portion, right? Keep it in that IRA category instead of putting it into the 401k category. So those are very, very different calculations, but although they do have the same contribution limits overall.
Love that. So let's go back again. IRA limits $7,000 for 2024. And let's assume that if you're over 50, there's more opportunities available to you. So let's just kind of assume under 50. Remind us again, with the simple IRA, what are the limits on that?
The simple IRA is $16,000. I'm sorry, I think I said 15.5 earlier. It's $16,000 for a simple IRA now for 2024.
And that's an employee contribution as well for that?
Yeah, that's all employee contribution. There are matches that you do. That's considered the employee, but that's all or employer, but that's all you're allowed to do.
Okay, excellent.
That will come out of your paycheck. Yeah.
So when I kind of look at this, again, the concept of first question, how much do you want to put away towards retirement? Like that's the question we need to answer. And if we look at somebody, let's just assume somebody making $100,000 a year. And we're looking, okay, what options are available? If you want to do a traditional IRA, max is $7,000. So if you say, Matt, I only want to put $5,000 away towards retirement, we made the decision easy. Let's go to the traditional IRA. If we go to a simple IRA, now we're talking about a $16,000 max that we can put in there on that $100,000 that we make. If we look at a SEP IRA, we're talking about of that $100,000, again, let's assume that we're an S corporation. Of that $100,000 salary that we took, the max we can do is $25,000. And if we look at a SEP IRA, the max we can do is $48,000. So I think that provides a really good kind of roadmap or illustration, at least, of kind of what's out there. So if I come to you and say, I want to do $5,000, okay, traditional IRA, easy decision. If I come to you and say, I want to do $10,000, okay, we can do a simple IRA or a SEP IRA. No need to go into that idea of a solo 401k if we only want to do $10,000. If I would tell you, Matt, I want to do max out as much as possible, well, traditionally, that's going to lend us to look towards that solo 401k route, especially with an S corporation, because we're looking to lower our salary as much as possible while still maximizing retirement. And with that solo 401k, we get the employee contribution plus that 25%. So that's kind of the route I think you as a business owner have to go down is, how much, especially if you have no employees here that we're talking about right now, how much do you want to put away? And that's going to start getting you down these lanes of, okay, what options are available then you can explore that a little bit deeper. That makes sense, Matt. Kind of that thought process and where you're looking at there.
That's exactly the exact way to look at it. There's no need to make it more complicated than it has to be. That's exactly the best way to explain it.
Now, a question for you. Let's say I'm a business owner and say, I want to max out retirement contribution as much as possible. So your kind of initial reaction is going to say, okay, let's go the solo 401k route. But then what if I come to you and say, but I don't want a headache. I don't want to make this a big thing. I don't want a bunch of fees. I don't want to go through a big headache. Talk to us a little bit about how, although it's more complicated than a SEP IRA or a simple IRA or a traditional IRA, solo 401ks also are not these big monster headaches, right?
Absolutely. Yeah. I mean, it's actually quite simple. So everything in business is about the net, right? What is your net? Are you in the black or are you in the red? So there might be a fee depending on who you're going to work with or what kind of plan you need to design. If you need to get really creative with what kind of solo 401k and what kind of investment you want to get to and so on and so forth. But everything's about the net, right? So you might have a couple $100s of fees in order to have that extra contribution limits, but you are netting a substantial amount more going into that solo than you are with the SEP IRA. And it's basically, what is the goal? Again, what is your goal? And that answers it. Even though it's a net difference, it's still higher than what you can do in anything else.
Yeah, love that. Now, one final question, just to kind of bring back where we were last week when we were talking about tax credits. Is it true that when we're talking about these plans with no employees, even if you are an S corporation and you hire yourself as an employee, is it true that those tax credits would not be available to kind of this realm of plans?
Yes, that is correct. And that's because even though you are an employee of your own company, if you're filing as an S corp, you are considered a highly compensated employee, right? Because you are the owner, right? And all these tax credits that we talked about last week in the last episode are all about the non-highly compensated employee. That's the goal. They want these non-highly compensated employees to save for retirement. And that's why they implement this.
Love it. So I think that this has been super helpful, especially for those, if you're a business owner with no employees, we don't get that cherry on the top as far as a tax credit that's available to us. But what we do get is just this opportunity to get a tax deduction, put money away towards retirement, which I think is still just as important, even without any kind of cherry on top. We see so many business owners think of retirement last, or think that the retirement is their business sale down the road. And then all of a sudden that business sale comes around and they're looking to enter retirement and their business isn't worth as much as they thought it was. And so now they have nothing available. And that's why I hope to start kind of get that idea flowing now of let's start saving for that and let the cherry on your top be that point where, hey, we get to retirement and guess what? Our business is worth money and we make a great amount of money on that sale. And we also have this nest egg of retirement plans. Let that kind of be your cherry on top than being stuck in that retirement phase where all of a sudden your business isn't worth anything and you have no nest egg. So hopefully that's kind of some encouragement there. Again, when we look at retirement plans for those businesses with no employees, start with the question of how much do you want to put away? And kind of that bottom levels, that traditional IRA, then the simple IRA or SEP IRA. And if you're looking to truly maximize retirement options, more likely than not, it's going to pencil out to be that solo 401k as the option for you. Now, Matt and his team have been absolutely incredible to listeners, to members of our Tax Helm software, have been absolutely incredible for just sitting down and saying, okay, let's talk about your situation, where you're at, and they'll direct you into what plan is going to be best for them. So you can connect with Matt and his team. In the link in the show notes, there's going to be a link to a website there. Otherwise, go to lifeincrs.com /tax-savings-podcast. There'll be an area there where you can go through the calculator, learn about the plans, connected directly with someone from Matt's team to kind of talk about which retirement plan is right for you. And again, next week, if you're a business owner that you've kind of stuck in here, but you have employees, next week we're going to be talking about those retirement plans that are available to those of you with employees. So Matt, any final words on this topic of kind of that retirement options with those business owners with no employees outside of maybe themselves and some family members?
I think that's it. The only other thing is we have that one question: how much do you want to save? That's the determining factor of what you want to put into. On the next episode next week, we're going to introduce one more question that's going to help really identify if you are a group if you have a group of employees, which one to choose from.
Excellent. Well, thanks, Matt, again for joining us. And I will see both you and listeners next week when we continue this dive on retirement planning.
This has been another episode of the Small Business Tax Savings Podcast. If you enjoy our weekly episodes, please leave a review and share with other business owners. You can find previous episodes and more information at www.taxsavingspodcast.com. Thanks for listening and have a great day.